politics to the world of business. This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Jobs numbers out today pointed overall to a strong labor market, despite that miss on the total new jobs created. For the market reaction, we turn now first to Abigail Doolittle. So, Abigail, I thought the equities are sort of mixed, but the one thing that's not mixed is the 10-year yield.
Truly not. The 10-year yield now up for a sixth day in a row this week, backing up to levels last seen before the pandemic. That's how high the 10-year yield is at this point, 178. So that idea of reflation, inflation, certainly there. And the jobs report supports it from the standpoint of a super tight labor market. I believe it was Adam Smith that said capitalism cannot actually live on unemployment rate below 5%. I guess we're going to test that again to see whether or not it can happen. But it certainly supports the idea of yields going higher, especially with that wage growth. I know that Larry Summers has been somebody who's, really talked about that that's a real problem for long-term inflation. So stocks not knowing what to make of this. Up, down, up, down. At one point, the NASDAQ 100 down more than 1%. But that cyclical trade still in play. The bank's really benefiting from yields higher.
So as you say, Larry Summers actually will be on Wall Street Week tonight at 6 o'clock Eastern time and talk about the need to get the wage growth down if you're going to control inflation. But talk about equities, because typically you think equities get hurt as you're looking at higher rates coming along, but it's not clear to me.
Well, it's really a division between the cyclical and the value trade doing very well. You have the banks, the KBW Bank Index right now up, I believe, more than about 10% this week, the best week since November of 2020. Big money center banks such as Wells Fargo, the best day or best week since June of 2020. So that's the sort of buying. But on the other hand, the rising yields, because of course rising yields help their lending activity, but the rising yields bring into the valuation concerns for the likes of Apple, Google, Amazon, Tesla, all of these high-flying stocks from last year, along with those big tech names. That's where the pain is. The NASDAQ 100, I believe, on pace right now for its worst week since February. That's quite a divergence.
Looks like it's down about 0.5% again today. So well said. Thank you so much to Abigail Doolittle for the report on the markets and how they're reacting to the jobs numbers. Now, to take us through those jobs numbers themselves in more detail, we welcome back to Balance of Power Betsey Stevenson. She's University of Michigan professor of public policy and economics, and she also is the former chief economist for the Department of Labor. So, Professor, thanks for being back with us. I guess the basic question I have to ask you is this full employment?
So I wouldn't quite call it full employment. I think what you are seeing is a pretty tight labor market, but there is some room for slack. So where do I see that room? We still see elevated numbers of people out of the labor force who tell us that they want to work. About 1 million more people in this jobs report said that they want a job, even though they're not in the labor force, compared to the level of people saying that prior to the pandemic, right? So there's always going to be some people who say that aren't going to come back to work, but we should be able to get that number down to where it was prior to the pandemic. So I think there's some slack there. I also think that we can get prime age labor force participation, right? Prime age are these people 25 to 54 years old that really, for the large part should be working. We can get that number back up. And right now that's still down compared to where it was prior to the pandemic. The places where I'm more concerned is, we've seen a decline in older people working. And I think for good reason. I think that the jobs have become harder and riskier, and older people just don't want to take the risk to go for the harder job. So I don't know that we're going to be able to get that increase in the participation rate of 55 plus back up. And that is something that's hurting us.
So Betsy, you say we can get the number, at least of the prime age, back up. Can we? Because there are some people now who are speculating this is more than just economics. Actually, it's a lifestyle change, that the pandemic has shaken up the entire economy, and some people have decided to do other things with their lives.
Well, there's definitely some lifestyle shakeup and people thinking about making changes. We see that in the quit rate. People are looking for different kinds of jobs. There's a tremendous amount of reallocation going on in the economy. But I think it's wrong to think that this is people just eschewing work, that they're not going to go back to work. Women have been driving the increase in labor force participation through much of the 21st century. So, the gains we had coming out of the 2008 recession we come out of the 2008 recession, labor force participation continued to decline through much of the first 5 years. And then it turned around and we saw a lot of growth between 2015 and 2019. Who did it come from? It came from mothers. It came from women in general. It came from more highly educated women going on to get that college degree. We saw just in the last year, women are still outpacing men at tremendous numbers and going on to college. So these highly educated women are coming back to the labor force. It's still a disruptive time to do that, but I don't think that we've pushed them out forever.
Talk about the wage growth for a moment. We just heard from President Biden speaking from the White House, touting the fact that the wages are up so much, particularly for what he said, frontline workers. He said they're up 15%, and he was very proud of that fact. It's good for the people getting more money. But what does it mean for inflation? Can we control inflation the way people think we need to and have that kind of wage growth?
So I absolutely think we can. So let's distinguish between inflation, which is a generalized rise in prices, and relative wage changes, where some people who are in hard jobs, like frontline workers, are getting paid a bit more. That's a shift in who's getting what. So the inflation aspect would be as if we were all getting a 5% increase in wages. All the prices go up in the economy by 5%. That's inflation. What we're seeing right now is wage growth in the bottom half of the income distribution that's much faster and higher than what we're seeing in the top half. So that may end up causing us to shift a little bit in terms of what we buy. We might consume different types of things. It may mean that people at the top are just not going to make the wages and profits that they were making because people at the bottom are demanding higher wages. That's a little bit of a reallocation, a little bit of a narrowing of the inequality that's grown tremendously over the last 20 or 30 years. But if we weren't concerned when all the wage gains were going to the top about inflation, why are we concerned when the wage gains are going to those at the bottom?
A variation on that question is minority employment gains, because that, President Biden admits, has tapered off a bit this month. Now, it's only 1 month, it's one data point, but what do you make about the minority gains, and for that matter, women as well in the workplace?
So, look, there's a lot of volatility when you're dealing with smaller groups of people, particularly in the household surveys, so that African American, the Black unemployment rate bounces around a lot more than the overall unemployment rate. So I don't want to make too much out of 1 month. But I do think it's important that we don't accept the kind of numbers we saw. The Black male unemployment rate in this month is 7.1%. That's unacceptable. That's not a tight labor market. So I think we do want to look below the surface of the overall unemployment rate to see who's still trying to get a job and making sure that we're creating space for them to get a job. If we look at what's happening with women, women have been coming back to work at roughly the same pace as men. But this was the first recession that really hit the service sector, and women lost the majority of the jobs. So we still see a gap between women suffering a little bit more, being out of the labor market more, but I do think we can bring them back. There was one thing I saw though in this report that absolutely worries me, and it should worry all of us, which is that we saw a decline in employment of healthcare workers and childcare workers. Those are typically lower wage workers who are essential for our economy to fully recover. So we've got to figure out how we bring people that work in healthcare, that work in childcare, back into those jobs, how we grow those jobs, and it's going to require higher wages.
And finally, a lot of us around Bloomberg will pay close attention to these jobs numbers because of what it might mean for the Fed. Is there any doubt in your mind that the Fed is likely to continue on its course of tightening, perhaps even faster, given these numbers?
I don't think there's anything in today's report that tells the Fed that they should reverse course, change course, make any kind of alteration. What they are not going as quickly as some people are advocating because they see that the labor market, we're not adding jobs super quickly. We did see some, strong upward wage pressure here. I think they've got a plan to tighten. They're on that path to tighten. It may happen a little bit faster than what they've currently announced, but I don't think that, you saw today's report and you thought, boy, I need to change my position on monetary policy at this point.
Okay, Professor, it's always so helpful to have you with us. That's Betsey Stevenson of the University of Michigan. Coming up, we talk with the third-ranking Democrat in the House of Representatives. He is Representative Jim Clyburn of South Carolina. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Yesterday was the first anniversary of the storming of the Capitol by a mob of Trump supporters, with President Biden using the occasion to call once again for comprehensive federal legislation to protect the right to vote right across the country. Welcome now one of the champions of the pending legislation. He is Representative Jim Clyburn of South Carolina, the House Majority Whip. So, Congressman, thank you so much for being back with us. Appreciate it. We did hear President Biden speak once again about voting reform, something I know you feel very strongly about. Explain why the storming of the Capitol a year ago yesterday makes it so important to have that kind of reform.
Well, thank you very much for having me. I think to begin with, we have to understand that what happened on January 6, 2021 did not start on that day. We saw from the beginning of the past administration a pretext being developed early on. I made the statement way back when the former president first addressed a joint session of the Congress that I did not think he was planning to ever give up the office. I thought then that autocracy was on his agenda. And I said so on one of the other networks. A lot of people took me to task for saying that. But now I see that people are now saying that the same dictator that I liken him to, Mussolini, is being applied to him time and time again. And so it means that in order for that to happen, you take away the right of people to vote, you suppress those rights, and you set in motion nullification processes. And that's exactly what's happening down in Georgia. Not only are they making it hard for people to even register, but make it hard for them to vote, saying you cannot give a person a bottle of water while standing in line to vote. What is that? And then putting in place a committee that will have the authority to nullify the vote when you don't like the outcome. That's autocracy. That is the beginning of the ending of this democracy. So I think very strongly that we need to pass these two pieces of legislation. And let me say this about one of them. I know that Senator Manchin, who I know very well, I hold him in high regards, but Senator Manchin seemed to feel that unless it is bipartisan, it's not worth doing. History says otherwise. The 15th Amendment to the United States Constitution, which gave blacks the right to vote, passed on a party line vote. So am I to believe that because that bill that did not pass in a bipartisan way, it should not have happened? No. And I think that that's where we are now. And that's why Joe Biden is going down to Atlanta. And what better place than John Lewis's hometown? And I think he will be speaking at John Lewis's home church and to lay out his commitment to voting rights.
So it's clear you feel very strongly about this. By the way, a lot of Americans feel strongly about this issue of voting reform. At the same time, it's hard right now, from the outside at least, to see how it gets passed. What about some alternatives? There are some people up on Capitol Hill proposing some amendments to that law going back to 1887, the electoral vote count that would actually make improvements, wouldn't take care of all your problems. Is that a good thing? Is that a plan B? Or could it take some of the attention and the initiative away on the main acts that you're pursuing?
Well, let me say this. We have decided that the United States of America should never have its full faith and credit threatened. And we won't let a filibuster do that. That's why we put in process this thing called reconciliation, that you can pass the budget with a simple majority. And I have said for a long time now that the word reconciliation, the root word of which is reconcile, is much better applied to constitutional issues than budgetary issues. And so I have never asked that the filibuster be done away with. I've asked that the filibuster not be applied to constitutional issues like voting, because you ought not be able to filibuster somebody's constitutional rights. And so there are a lot of things that can be done. But so long as you allow one person to sit downtown in a spa somewhere and phone in opposition to my voting rights and never have to go to the floor, never have to show his or her face, there is something undemocratic about that. And that's the kind of stuff that could destroy the underpinnings of this great country. And I do not believe it should abide any further.
Congressman Clyburn.
You know, I grew up in a parsonage. Yes.
No, please. I want to hear about the parsonage, please.
I grew up in a parsonage, and so I am guided in large measure by biblical thought. And I often think the Apostle Paul's letters to his son, at least religious, in Christianity, Timothy. And he talked about being a child and acting as a child, speaking as a child, but becoming a man and putting away childish things. I think this country is maturing, and things that applied to this country at the time of its birth, we have grown out of. We have grown out of the filibuster, and it's time for us to act as grown-ups and get rid of that immature process.
Congressman Clyburn, a short time ago, we heard from President Biden talking about the jobs numbers that came out today, and he took the occasion to say how important it was, in his view, to proceed with what he calls the Build Back Better package up there. At the same time, we can go back to Joe Manchin, you referred to with respect to voting, again with respect to Build Back Better. It doesn't look like it's going to get done. As a practical matter, is the Build Back Better plan that the president has proposed, is it dead?
Well, you know, I don't know what you might want to call it. I think that Joe Biden likes Build Back Better, and I do too. But, you know, we had the For the People Act dealing with voting, but Manchin has come up with some substitute language, and that's all right with me. So the label is not important. The contents are. And so long as we can get something passed that will deal with the child tax credit, that will allow women to go back to work and have the security of their children being taken care of. The kind of things that will put affordable housing out in the process. We are short of housing in this country. All that is in Build Back Better. So you don't want to call it that. Call it something else. But let's get the contents out before the American people so that we can keep this economy moving forward. So yes, I'm all for Build Back Better, but on another name, so long as it's the same, I'll be okay.
The Democrats face an uphill battle, most people think, in holding on to a majority come November. What are the consequences for your party with respect to the House of Representatives if you don't get some significant thing called a Build Back Better or something else done?
Well, you know, I think you're right to apply it to the party, but I think it will also be right to apply it to the country. If we do not get voting rights done, it will be the beginning. It will be the beginning of the ending of this democracy. You cannot allow people's votes to be nullified. You cannot allow someone who may not like the outcome that the voters produce to just change it with their little committee. So this is what was being attempted on January 6th. So I would say that if the American people want to continue this pursuit towards a more perfect union, then we must go to the polls next November and vote to make it so. If you're okay with an autocracy, if you want one man to create a cult out of a major political party and have everything beholden to him and pass it on to his children or people he may choose, if that's what you want, then stay home. But if you want to see this country continue and pass on to your children and grandchildren the opportunity to live in a free world then you'd better go to the polls next November and vote like you intend for that to happen. And that's why I think the speech made yesterday by President Joe Biden kick-started that effort. I'm hearing from people from all over. Why wasn't this speech given 6 months ago?
Right.
Well, it could have been given 6 months ago,
Right.
but it should not have been given 6 months ago. I think it was given at the right time. No matter how good a speech is, the timing has got to be there. Yesterday was the right time for the speech.
Congressman, it's always such a pleasure to get to talk to you. Thank you. That's Congressman Jim Clyburn, the House Majority Whip. More Balance of Power is coming up next on Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Earlier today, I spoke with Wall Street Week contributor Larry Summers about the jobs numbers today.
I don't think anybody can look at this labor market and this jobs report and believe that we have a sustainable degree of heat in the labor market. The level of heat that we have in the labor market is consistent not just with high inflation, but is consistent with accelerating inflation, and there isn't going to be a path to less inflation without a cooler labor market, and I think that has to be sobering. There may be fluctuations, there may be some transitory elements in inflation that come down, but it's pretty clear that the core level of inflation being driven by wages, which are, after all, the dominant cost for business, is now well above target levels. And we're not going to see credible inflation at 2% until there's some cooling there.
Now, a programming note, Wall Street Week will air tonight at 6 p.m. Eastern Time. We'll be joined by Larry Summers, who you just saw, Glenn Hubbard, Katie Koch, Greg Peters, and David Rubenstein. Coming up, Jared Bernstein about those job numbers coming to us from the White House. And this is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Ritika Gupta.
Thanks, David. A blast of winter weather pummeled parts of the northeast and mid-Atlantic U.S. today. The storm stretched from Virginia to Maine and dumped upwards of 5 inches in New York City before tapering off by mid-morning. In Boston, where school is cancelled, heavy snow is expected to last through the afternoon. Nearly 8.5 inches have fallen at LaGuardia Airport. Central Park has 5.5 inches. Bridgeport, Connecticut has 8.2 inches, and Newark, New Jersey has 5 inches. Government offices in Washington were closed after 2 to 5 inches fell there, according to the Office of Personnel Management's website. And the winter weather forced airlines to cancel more than 2,000 U.S. flights. Those cancellations mark the 5th day this month with more than 2,000 scrapped flights, as a jump in coronavirus infections made it especially difficult for airlines to keep operations fully staffed. Hospitals across the U.S. are struggling to get workers they need to treat patients through the winter's COVID-19 surge as the virus collides with a historically tight labor market. High demand for labor throughout the economy is making it harder to find replacements for doctors, nurses, and support staff who have been sidelined by the Omicron variant. It's especially tough in small towns and rural areas with aging populations and fewer people entering the workforce. An African-American acting legend, Sidney Poitier, has died at 94. He was known for transforming the way black people were portrayed on screen in Hollywood. In 1964, he became the first black actor to win an Academy Award for Best Actor in Lilies in the Field. He also was the first to be a top box office draw. In addition to his accomplished film career, he was knighted and appointed Bahamas ambassador to Japan in 1997. He was also awarded the Presidential Medal of Freedom. He leaves behind 6 children. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thank you so much, Ritika. Well, today is the first Friday of the month, which of course means it is Jobs Day, with the overall number coming up short of expectations today, but otherwise pointing to a very robust labor market. For The View from the White House, we welcome now Dr. Bernstein. He is a member of the President's Council of Economic Advisors. So, Dr. Bernstein, thank you for joining us here. We heard from the President. He said that he was pretty pleased with where we're heading. Give us your take on where we are with the labor economy right now.
Well, first of all, if I'm not talking to David Weston, then it's not a complete Jobs Day in my mind. So thank you for inviting me. We are in the midst of an extremely strong labor market boom. If you look at the year-over-year numbers, now that we have December, the unemployment rate fell almost 3 percentage points in 2021. That's the fastest decline on record. And these data go back to the 1940s. 6.4 million jobs over the year, again, an historical record and a record for the first year of any presidency as well. We know from other reporting that there are about 11 million job openings and about 6 million unemployed people. So when you have that many more job openings than unemployed, workers have some bargaining clout. And we're seeing that show up in some of the wage gains. Nominal wage gains about 5% in the private sector. But if you look at lower paid workers, it's about 6%. And if you look at transportation, warehousing, hotels, restaurants, some of the areas where labor demand is particularly strong, there you see double-digit nominal wage increases, so beating prices in those sectors.
So I want to underscore something I think you just referred to, Jared. Looking back 18 months, I didn't remember anybody projecting that we would be down to 3.9% unemployment at this point. I think the Fed was projecting like 5.5% as recently as June of 2020. So it's a wonderful story in that sense. Is it possible to get a boom that's too big and too fast?
Well, in terms of providing gainful opportunities to particularly middle and lower wage workers, which of course is at the core of President Biden's agenda, the answer to that question is no, in the sense that we want to make sure that there is a welcoming labor market so that people can come in and find jobs with rising pay. At the same time, we have to do everything we can, the president spoke about this morning, to try to ease inflationary pressures. One of the areas would be helping to try to unsnarl supply chains, and I know you and I have talked about this before, making sure that there's enough competition in the industry sector so that any price savings get passed forward to consumer. And we've talked also about some of our interventions in the energy market to help ease some of those price pressures. So what the president said this morning is, I think, a very interesting frame here, which is that you want to maintain such strong demand because it's so core to worker bargaining power, which is at the core of President Biden's economic agenda. But at the same time, we have to make sure that we elevate the supply side, both in the near term and in the longer term, to ease inflationary pressures and accommodate that very strong demand.
So, Jared, I'm genuinely curious about this. How do you coordinate monetary and fiscal policy? Because obviously there's independence of the Fed. The Fed can't do very much that I'm aware of on the supply side, can do on the demand side. They're very concerned at the Fed right now about inflation, as we saw from the minutes we got this week. So what is the best way to coordinate economic policy when you can't really do that?
I think it's easier than it sounds. There are two parts of it. One is stay the heck out of the Fed's knitting. All right, so the last administration obviously didn't value that independence the way we do. And of course, that's a very strong value of ours when it comes to setting monetary policy. But the second is where we can make a difference is on the fiscal side, is in the some of the concrete or more granular aspects of the supply chain. In the ports, when it comes to trucking, those are some of the near-term interventions that we've done. Ensuring that there's enough competition, making sure our Federal Trade Commission is watching carefully to make sure that any competition between industry is generating price savings for workers. And again, we had recently a strategic release of oil from our reserves. So that's the kind of granular supply side part in the very near term. Over the longer term, there's a very long tradition of fiscal policy helping support the economy's productive capacity through investing in infrastructure and investing in people, in physical and human capital. And that's very much part of Build Back Better. And it was great to hear you talking about that Jim Clyburn a minute ago, because the president continues to fight for that, in part from the perspective, again, of this economic story where we have very strong demand, and we want to meet that demand with expanded productive capacity in the economy supply side.
Finally, one more question about the labor market, and that is with respect to participation rates, because it's not coming down very fast at all, or I should say going up. We're not getting people back in off the sidelines. Is there a point at which that just becomes structural?
I think that the way to think about that is that we have seen in the past, I actually think that there is a real cyclical component to it. So what we've seen in the past, and I think economists have learned this, I think the Fed's been very good about promulgating this message, is that persistently strong labor market demand will pull people in from the sidelines. Often those are people in communities that have been left behind. Often it's minorities. Often it's people who don't benefit until the economy hits full employment and stays at full employment. Now, right now, we have a couple of other barriers to entry to the labor market. We have COVID out there, and we also have insufficient childcare, and then there's some issues with schooling. We have to make sure, this gets to your question a second ago, what can we do to help smooth the supply side? We have to make sure that we're doing everything we can to take down any barriers to the labor market for people who want to get in there. That means affordable, accessible childcare. It means vax boost, and make sure that there is adequate COVID protections out there for people. And it means holding this full employment economy to terms as long as we can do so. And even with Omicron in the economy, we still see forecasters predicting that by the end of this year, the jobless rate will be down to 3.5%. Well, as we speak, we're 40 basis points away from that with December's jobs report. So we are closing in on that way ahead of where people thought we would.
Well, Dr. Bernstein, you said it. It wouldn't be Jobs Day without my getting the chance to talk to you. Thank you so much for your time. That's Jared Bernstein. He's a member of the White House Council of Economic Advisors. Coming up here, the Supreme Court takes up the question of the administration's vaccine mandates. We talk with law professor Tara Lee Grove of the University of Alabama about what is at stake. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Supreme Court today is hearing arguments in challenges to two of the Biden administration's vaccine mandates. One applicable to all companies with more than 100 employees, the other applicable to workers at health care facilities that participate in Medicare and Medicaid programs. To explain the challenges and what may be at stake, we welcome now Professor Tara Lee Grove of the University of Alabama School of Law. So, Professor, thanks so much. Great to have you back with us. First of all, let's address one procedural thing, if we could. I love procedure. It's a little unusual because this is not a typical case that's come up fully briefed and decided below. This is like on an emergency basis.
That is correct. So the challengers are asking the Supreme Court to issue a stay and really an injunction to prevent the administration's order from going into effect. So I think it would start on Monday, and they want to prevent that from going into effect. And to be clear, the order from the Occupational Safety and Health Administration is not a vaccine mandate. It's a requirement that employers either get employees vaccinated or have testing and masking requirements. So no one actually has to get vaccinated under this order.
Yeah, a really important clarification. Thank you for that. That's the one that applies to all employers who have more than 100 employees. At the same time, explain to me the basis for the challenge. Why are the challengers, the states particularly, saying that this would be illegal? Because as I understand, the Solicitor General in the argument said that they've projected that something like 6,500 workers might lose their lives over the next 6 months if they didn't have this requirement.
So a lot of this comes down to statutory interpretation and the scope of OSHA's regulatory authority. So typically, OSHA can make regulations that are reasonably necessary to safety and health. And when they do that, they have to go through a process that's called notice and comment rulemaking. And this is where an agency asks for outsiders to come in and weigh in on a particular rule. It's a very democratic process. A lot of people can weigh in, but it also takes a very long time. So the OSHA Act also allows OSHA to act on an emergency basis. And Congress said they can do that when a regulation is necessary to protect the safety and health of workers. And that's the authority that the agency used in this case. And so what the challengers are saying is that you need to meet a higher burden to show that something is necessary so that you can act on an emergency basis. The government agrees with that there has to be a higher burden, but says that in the midst of a global pandemic, they have met it.
Well, I wonder, again, go back to process for a little bit. Do they have the record in front of them that would indicate how big an emergency this is? Or do they take judicial notice of the fact that an awful lot of people have Omicron right now?
So that's a really good question. The record that OSHA created, and it did create a pretty extensive record, it created it a couple of months ago in the context of Delta. And so it was an interesting moment at the oral argument. People talked about both the record before the agency at the time and also recent evidence about Omicron and its spread, something that Justice Breyer brought up a couple of times. I think that the court will have to judge it on the record before OSHA, but at the same time, because the challengers are asking for an injunction, and considering whether an injunction and a stay is appropriate right now, the court would probably need to take into account what is going on right now.
As you've pointed out, Professor, there are two very different mandates here applicable to different entities. Is it possible, conceivable, that the court might split the difference, say no to one and yes to the other?
Absolutely.
And which one is the more likely to be upheld?
So I think the regulation of medical personnel is probably a little bit easier. The challengers in the other case were saying it's not that OSHA can't do anything. They said that OSHA has just overshot in this particular instance, that OSHA is regulating all businesses with 100 or more employees, and the challengers say OSHA needs to go business by business and try to figure things out. The agency, of course, replied, this is a pandemic where we've discovered that vaccination and masking and testing help for lots and lots of people, and every business has been affected, and so they don't need to go business by business. But I think because of that aspect of the broader regulation, it will be easier for OSHA to prove the validity of its more targeted regulation.
Finally, Professor, this obviously has the potential to affect millions of people across the country, but go even broader than that if you would. Is it possible that the rulings in these cases could tell us something about the scope, the authority of the administrative agencies more generally in Washington?
Yes. So right now, several justices have indicated, or in recent years, several justices have indicated that they are highly skeptical of the administrator state writ broad. They think the decision should be made by Congress itself rather than delegated to executive agencies. And this idea very much came up in the oral argument today. So several justices indicated that when something is a big question, such as whether employees should get vaccinated or get tested and wear masks, this is the kind of question that should be answered by Congress or by state legislatures. I don't think the Supreme Court in this case is going to completely overhaul the administrative state, but I think we can read the tea leaves of at least some judicial decisions that ultimately come out of this to see where the Supreme Court might be heading with respect to the administrative state more broadly.
Okay, Professor, this has been very helpful. I really appreciate you being here. That's Tara Lee Grove of the University of Alabama School of Law. And we want to break some news right now. We've just heard that Speaker Pelosi has invited President Biden to come up and give the State of the Union address. That's the way it works. The Speaker has to invite the President for March 1st. And if memory serves, I think if that happens that way, that'll be the first time the State of the Union has ever been given in the month of March. Coming up here, we talk with the former mayor of Miami Beach. He's Philip Levine, about the state of the cruise industry. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Just when the cruise industry thought it might get going again, like the rest of us, it was hit with Omicron variant of COVID, with the CDC advising travelers to avoid cruises whether or not they are vaccinated. We welcome now an authority on the cruise industry. Philip Levine is an investor and entrepreneur who earlier served as mayor of Miami Beach. So welcome back, Mr. Mayor. It's good to have you back. Last time I think we talked, it was really bad for the cruise industry. It looks like we may be going back there. Give us a state of the play right now.
Well, I don't think we're going back there. And I think the cruise stocks really reflect that, David. Right now, the cruise stocks are all up. And I think that's an indication that the market, as Mr. Bloomberg, Warren Buffett would say, Mr. Market is saying that there's a great future for the cruise industry because the demand is so massive. The future bookings are so strong and the pricing is so incredible. So I think there's a feeling that this is going to come fast, leave fast, and people are booking nonstop every day for future cruises. So it's a short-term issue, not a medium or long-term issue.
How bad is it right now? Do you have a sense of it? And this is not just Miami, and it's a global business, and we see reports of cruises getting canceled out of Hong Kong and things like that.
I think people are being incredibly careful, but I think everyone needs to realize that, the no sail order, which was issued by the CDC a while ago, was lifted. The cruise lines are allowed to operate freely, but they have spent millions of dollars on safety protocols. And there's a big belief out there, David, which is very true, that it's safer to be on a cruise vacation, to be out somewhere in a holiday at a hotel or wherever you would be, where you don't know if people are actually vaccinated and there's no sense of total control of the environment. So I think they're operating at limited capacity. They're being incredibly careful. But the demand is powerful right now, and they're doing everything they can to keep everybody as safe as possible.
So you know this industry so well, and I do not. Give us a sense of how far out people book things, because I'm going to ask about whether bookings are indicating that people, customers, sort of agree with you that it may come hard, but it's going to leave fast.
Well, that's what's going on right now. And I've heard from a lot of my friends in the industry, as well as actually friends of mine that are booking cruises. And you say to yourself, boy, Omicron's hitting us so hard. Why are you booking a cruise right now? Because there's a belief, and I think it's a valid belief, that that this is short term. And so people realize that prices are going up. We are in an inflationary environment. The cruise product is more limited today than it was maybe a year, 2 years, 3 years ago. People want to get their suites. They want to get the right cabins at sea. They want the right itineraries. And they know that better days are ahead. The demand is there. And, I think, like I said before in the beginning, it's all about the cruise stocks right now. They're trading very strongly because the demand is there. If there wasn't demand, then I think we'd have a problem. But the demand
no
is
question those cruise
right now.
stocks have really come back. There's no question about that. If you can, take a longer view here. When we're through this, whatever that means, but we can go back with our lives at some point, what lingering effect will this have on the cruise industry, if any?
Well, I think the cruise industry was always on top of doing everything they could to make the most healthy sailing environment possible. I mean, think about this. They hired Dr. Stephen Gottlieb, who went out there and created the most strenuous, strict protocols for the industry to operate. So I think the trend is going to be that cruising will continue to be safe, but over the year, 2-3 years from now, it'll become that much more safe because they've learned so much because of this pandemic. And I think a lot of the hotels are watching what the cruise industry is doing, and hopefully maybe the airline industry will as well. There's certainly a lot of confusion coming out of the CDC because, when you look at what they're saying about the, cruising, you wonder, why not airlines? Why not hotels? Why not movie theaters or Broadway? I think the cruise lines take a little bit of a brunt of this, but they're making strides and they will continue to do so.
Do all those safety improvements change the cost structure?
Yeah, I think it does. I think it's adding more cost to the cruise industry. I mean, they're putting in all types of air treatment facilities on board the vessel, incredible wellness medical facilities on the vessel. The testing procedures cost money, more staff. There's no question. But think about it, though, David. It's still the greatest vacation value in the world. You go on this ship, everything's included, and that ship takes you everywhere you want to go. And that will never be beaten by a pandemic or medical cost or anything else. That's an advantage of the cruise industry.
Spoken like a true authority. And by the way, the former mayor of Palm Beach, Miami Beach, I'm sorry. That's Philip Levine. Thanks so much, Philip, for being with us today. And check out the Balance of Power newsletter on the terminal and online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk with Angela Stent of Georgetown about Vladimir Putin's next move. This is Balance of Power.